Welcome everybody to the 405 number one stock chart of the day that I like to share with you from time to time during the trading week. I'm Brett Rosenthal. This is the ARMR Investing Way. We call this a virtual hedge fund experience. Ran hedge funds for over a decade, personal capital for over 30 years, and I'm sharing with you the tools that I use to day trade, swing trade, and invest. And today we're going to focus on how to day trade the indexes. Now, this is kind of like a series. You can find this if you're a subscriber. You can subscribe to this channel. Of course, down here, if you find this helpful, go ahead and share it with your friends. I would appreciate that. Help me out. If you have any questions after this, you can go ahead and put it in the comment section. I'm happy to answer during the week. What we do here, when I say virtual hedge fund experience, you come on the desk right now to watch. You got to think of yourself as a portfolio manager at a hedge fund. You're going to take the information that I'm sharing to figure out how it fits into your risk tolerance, your goals, and how you want to run your money. What I do personally, is I divide my capital into thirds, a third to day trade, third to swing trade, a third that let's put it this way, a third where I macro invest, and then a third where I focus on disruptive growth stocks, okay, or aggressive growth stocks. So today we're going to focus on that third that is day trading. When I day trade, I like to put 100% of my capital to work in the index. I trade triple the S&P. So the stock chart of the day we're talking about today is SPXL. You can also trade triple the NASDAQ 100, TQQQ. Some of the portfolio managers on our desk, subscribers, trade the Qs. So what I'm going to show you works on the S&P. It also works on the Qs. It's almost the identical trade today. I like to trade one asset. I like to trade that asset big. It helps cut down on slippage. If I only have one trade to focus on, it makes it easier for me. So I could trade both indexes, but I focus on the S&P. I look at my day trading portfolio as really my conservative money. It's in cash every night. I force myself to have 30% cash every night because that's what I do with that day trading portfolio. Then what we do is we're building and we're sharing with ARMR insiders step-by-step ARMR day trading plays right out of our playbook. And I'm going to share this one with you today. It was a monster day for us. All I'm doing is putting 100% of my day trading portfolio into triple the S&P. So I go to bed with cash, no risk overnight. Market's down in the morning. I put capital to work. Market rallies. I capture a large gain because I'm capturing 300% performance of the S&P. And then I go back to cash, sleep on cash every night. And in this market with 5% short-term treasuries, it's a no-brainer, right? So it's a conservative way to run money, but I use an aggressive asset, which is the triples, to capture the upside necessary to make the strategy work. I'm going to share with you right now the chart pattern step by step and a bonus, which is one of my favorite buy triggers. Anybody can use this. Anybody can do this. If you get a book called Candle Power, which is my favorite book, I have it back here on my trading desk. You can use any book you want about candlestick charting, but this is going to be a median bar reversal off of a key location. So you're going to see a screen with a lot of lines on, a lot of things you can do, and that's great. Go ahead. I'm going to share with you what I do. It's our algorithm. But for everybody out there who's not a subscriber, who can't see the algorithms that we're using and wants to pick up a piece of information from this conversation that anybody can use, it's the median bar reversal using candlestick charts. And I'm going to show you how to do that. So let's dive right in. Okay. This is our day trading screen. What you're looking at are 3-minute bar charts. Why don't you grab a pen and a piece of paper and write a couple of these things down to help you when it comes to day trading. Number one, 3 minutes. Okay. A lot of people use 1 minute, 5 minute, 15 minute, 10 minute. 3 minutes is what we use. Give it a shot. Okay. Now what we have, so every bar that's blue is up, red is down, and then the blacks and the yellows are paint bar studies on top of that using TradeStation. But anything, you can use any trading software you want. I use TradeStation. Okay. The first thing we do. So you're looking at the S&P here and the NASDAQ here. The first thing we do is we use average true range. And I discussed this with you last week. Again, subscribe to this channel. You'll get these updates. You can go to our channel and look for these day trading discussions. We went over with you last week how important the average true range is to the way we execute. We have our own proprietary average true range indicator. As important as getting on the trade today is avoiding the disgusting market yesterday. We did not put capital to work yesterday. The market cratered. We didn't do it because of the ATR indicator we use on our desk that I share with all insiders throughout the day. So what we're seeing here is, I'm just going to show you, I'm going to blow up this picture for you real quick so you can see it, both of these days, and how the ATR really goes a long way to helping us know when to put capital to work and when to avoid it. Okay. This blue line in here at the top left part of your screen. Okay. This blue line that's stair-stepping lower that I highlight for you with these gray boxes is the average true range high of the day. This line right in here is the average true range low of the day, right? It just flatlined straight across yesterday. The ATR high was stair-stepping lower all day. That's a day to avoid day trading from the long side. We can talk about short selling on another video, but that's a day to avoid day trading on the long side. So we kept our day trading capital in cash as the market was getting killed yesterday. Okay. Then today we have a classic ARMR day trading setup. This goes right into our day trading playbook. And again, we're producing this playbook for ARMR insiders, our subscribers. They're all going to get this playbook, PDF file, and maybe even hard copy. I'd like to kind of lay it out for you. We have 3 separate opens that the market can do. The whole idea of the playbook is to map out human emotion, right? It's just like a football playbook. There's just so many plays from the line of scrimmage. Forget about the kind of, specialty plays. Forget about that. There's just a basic core amount of plays. The faster you discover that it's an off tackle or a post pattern, the better your defense is going to be. Okay. It's the same thing with running money and day trading the S&P. There's just so many ways the market can open and behave. The faster we see it, we know what our trade is going to be. Okay. And so the playbook, here it is back here. We're putting it together. Okay. So we're close to having that published. But this will go in the playbook step by step. Gap down at the open. So we categorize the market day trading opportunities into gap ups, gap downs, and flat opens. The market has different plays based on each type of open. Okay. So this was a gap down open. The gap is right in here. You can see that market closed at this price and opened at that price. Okay. So that's clearly a gap. All right. It closed here, opened here. There's your gap down open. All right. There's the double bottom after the open. This is the median bar reversal that I want to share with you. We're going to get to the NASDAQ in a second so you can see both of them. But this is the key median bar reversal. And now let's blow up this pattern here. Whoops. That'll work. Now you see the trade. Every line on here is part of the ARMR PMP, which is a price movement profiler, we call it. It's an algorithm we use. Okay. So right in here, I want you to see the median bar reversal. I'm going to blow it up again. Okay. The down bar is in red. The blue up bar, the very next bar is in blue. They're almost identical bars. This is a median bar reversal. Classic. It looks like the market's breaking down, and 3 minutes later, it reverses the entire move. Okay. The buy trigger is when you take out the high of the median bars. So go ahead and write this down so you can do this on your own. You don't need me for this, right? You could go use any chart pattern where you can do candlestick charting. You can go buy the book on Amazon or something, Candle Power, whatever one you want to use. And you'll read about the 3-bar reversal that's called median bar. It's my favorite. It's one of my favorites. Okay, I've got others. This is the one we're talking about today. All right. So there's the median bar reversal. You buy it as soon as it takes out the high of those 2 bars. Okay, that was where we bought the market. So basically right off the low. What is the ATR setup? This allows us to trade today. The ATR high of the day is right up around the 3rd Fibonacci extension from the opening range. As long as this ATR up is above the 2nd fib up, we're allowed to put money to work on a long day trade. And what we look for is the stair step higher, okay, in the ATR low of the day. So the stair step higher early in the morning was what really got this trade started. There's the reversal. That's where we get long. That green arrow is where we get long, right? That time period. And then you can watch these red lines are how we manage our stop positions. We book some profit at these yellow boxes. So we book some profit there, some profit here. Every time we book a profit, we raise a stop. So the stop starts, this red line, at the low of the median bar. When we hit the first target, we book a profit and raise to the low of the testing location of the entry point, which was those 3 down bars in the tail. Okay. Then it hits the next target. We book more profit and we raise our stop aggressively to the low of the bar that hit the next target. This was our primary target. This up here is our hoped for target. On a chop day, this trade would have ended right here and come back down to VWAP, these black dots. So we have an aggressive stop to make sure we have a good day. But on the best days, they don't challenge the stop. It's okay to raise your stop aggressively. It doesn't take it out. And it runs right up to our favorite target, which is the ATR high of the day. And as you can see, it puts in a top right at the ATR high. And we're booking profits at each of these yellow boxes, and the final exit's right there. We captured the entire move of the day today, and the market just went lower and closed at the VWAP. That's a step-by-step way of trading the market. We do this every day on our desk. If you want to join us live, right there, armorinvesting.com, ARMR investing.com. And as it's happening, I'm calling it out to you, sharing it in the Slack room. Okay, so you all can join in and learn as we go. The more you do this, the better you'll get at it. And I'll just wrap up with this one thought. The best trades, the best days where we trade like this and make this kind of money occur when the NASDAQ 100 confirms it. And if you look at the NASDAQ 100, it's almost the same setup. Same stair step higher in ATR, same flat ATR up top, same exit strategy, booking our profits at the same locations. So you could have traded TQQQ or you could have traded SPXL. Either one works. I like the S&P. I hope you guys found this helpful. Go ahead, subscribe to this channel to make sure you get the updates. Share this video if you found it helpful. And if you have comments or questions, put it down in the question section, comment section. I'm happy to answer it for you. If you all have an interest in kind of testing out what we do, you can always consider that right here. We have a free 5-day trial. Go ahead and try it out.